In this video, we're going to talk about Vinco Ventures, trading under the ticker symbol BBIG. Over the past few weeks, BBIG has gathered a lot of attention from the market, and many are interested in owning a piece of the company because they speculate about a possible reverse in the efforts to short squeeze those who want the stock to go lower. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. Those are prepared, recorded on the day before, and scheduled for the next day. If there are significant and volatile movements during the trading day, they will not be reflected in the video itself. With that being said, to the extent possible, my analysis will be based on the medium term, or even the long term, and not necessarily on the intraday movements. The main reason why it shouldn't matter that much is because most people investing in stocks, or even just trading in and out of their positions, usually keep their positions open for at least a few weeks. With that being said, if there are significant movements in the stock price that happens afterwards, either they will not affect the overall picture, so in that case we will cover them the next time we're supposed to cover them, or if they are significant enough that they change the outlooks, then yes, I will do a follow-up video in the shortest delay possible with a reevaluation of what I think should happen next. The appeal of Vinco is twofold. It has a decent narrative with regards to the potential of a video platform, and it has a lot of traction due to the short squeeze that is still going on. Vinco has a market cap of approximately $542 million, even if its EV, enterprise value, is only $70 million according to some of the platforms. Now, obviously, the valuations will differ based on which platform and on which basis the company is valued at, but nevertheless, I think that we can all agree that there's a huge gap between how much the company is worth with regards to its operations, its size, the scale, and the assets versus how much it's worth in the eyes of the investors. And that's because a share of Vinco Ventures is not just a piece of the company with a good potential, with a good narrative, but it's also a ticket to potentially benefit from a short squeeze. There are 107 million shares outstanding, and there are about 300 significant shareholders, maybe a bit more than that. So if we use the price to revenue ratio, then the company is valued at a relatively high place compared to other companies, even those that are still in the startup phase. The company's quick ratio and current ratio are far higher than any typical company of the same sector. And this means that it has a lot of cash ready to be deployed for projects or to fulfill short-term obligations. In fact, we don't have to worry about Vinco's debt and its solvency. The company has just $6 million of debt versus $121 million of assets. Over the past 10 days, the daily average has been around 40 million shares a day, even if the volume may fluctuate on a daily basis, going from 25 million shares a day to around 31 million shares a day. The volume actually impacts the price action. I believe that as long as the volume doesn't reach 35 to 40 million shares a day in a sustainable way, that is, there may not be enough fuel to push BBIG stock upward in the short term. With that being said, we can see that there has been a bit of support at the $5 level, and if it manages to hold its ground, it may be a decent entry point. And if we take a look at the options that are exchanged for Vinco shares, we can see that contracts are overwhelmingly favoring the call side. And this means that the market sentiment believes that Vinco stock is expected to eventually go higher, especially above the exercise prices of $5.50, $6, or $7. My recommendation in this context is to continue to increase your exposure if you don't have a lot of BBIG shares in your portfolio, specifically if you have enough room for another 0.5% in the stock, and I would say that it's a decent entry point to buy them now. With that being said, my overall recommendation is to keep your exposure well below 1% of your overall portfolio, and structure your trades so that it is within your expectation that BBIG will keep falling over the next couple of days or even weeks. Your investment should also take into consideration the market conditions and the surrounding sentiment to determine what kind of asset should be picked, for how much and for how long. First of all, the financial market doesn't reflect the real economy. If the stock market is doing great, it doesn't necessarily mean that companies are hiring people, that salaries and living standards are rising. Sometimes it's the exact opposite that happens, because the stock market is a pool of money where things come in and come out, going to different sectors to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is being used for non-productive purposes like merger and acquisitions, fees to financial sectors, buying back equity, and so on, the less there is for the real economy. Another way to put it is that ever since 2008, the Dow Jones has increased significantly. But people don't necessarily see this growth in tangible ways. This is why we gotta be careful with the assumptions that rising stock price means better outlook for the company. Sometimes it doesn't mean anything other than the fact that the asset is getting more expensive to be bought and that their yields is going down as a result. Additionally, some new phenomenons are now palpable, such as the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullback. Bubbles have always been created on and off over the past few centuries, but nowadays it's quite interesting to see the speed at which an organic bubble can be created back in 2020. Because almost immediately after the major collapse of the financial market back in early 2020, the market decided to pour a massive amount of capital in the EV sector and anything that's related to it. Stock prices went up the sky, and for a moment, it really felt like any EV stock can be a golden goose. Another way to say this is that any SPAC with an EV company in it will become the next Tesla, right? Even if it didn't last that long, this episode definitely allowed the market participants to park a lot of their money in a sector, leaving it with either a lot of profits or at least avoiding incurring large losses because they left their money in the blue chips or the sectors heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, especially in the scenarios of a short squeeze. Companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then also trigger an even bigger increase of stock price as a result. Of course, I'm not saying that this is always rational. I'm not even saying that those companies always have a convincing narrative. So, for example, if you play video games, ask yourself if you personally bought all your games at GameStop, knowing that you can buy the same games just online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price nowadays, for the better or worse. Personally, I think that as long as the volatility is high or gets higher, it'll create more opportunities. The final phenomenon is the anticipation of a recession. Many people have been expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because their debt structure is no longer sustainable or that their business model is bad. But overall, the system was able to hold its ground, especially in the North American market. This is partially because capital around the world often choose to come to the American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that capital can provide a steady return without being affected too much by the central bank policies and inflations, I think that this phenomenon will increase its pace as time passes by, at least for the next couple of years. This is why we will likely see the blue chips continuing their ascension, even if for the growth stocks, things may be a lot more nuanced. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain quite low, because the real economy cannot be improved with just money. As far as we're concerned, this means that the patience would be a great virtue for all of us, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and keep the risk level under check. Speculative positions should play a small part in your overall portfolio. I would say it's better to keep them below 10 to 20% of your total holdings. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.